Volkswagen stock goes into a free fall after the company admits to installing software to cheat emission tests. Shares at an $18 billion fine from the US authorities. The CEO apologizes to customers and investors.
We want the entire instability over pending taxation issues to be resolved.
Finance Minister wraps up his 4-day visit to Singapore and Hong Kong to reassure investors, promises speedier resolution to tax disputes with multinational companies.
Through various government instrumentalities, there is a major shareholding that the government has, but the government maintains an arm's length distance, and it's a bank which has done remarkably well. And therefore, can we, with regard to any other institution that we have, the IDBI, follow that model?
The IDBI stock surges 17% after the finance minister promises more autonomy, says the centre could look at recasting the shareholding.
There's a prima facie case to probe allegations of bribery against Hindalco, says the CBI to the Supreme Court. A PIL accuses the company of bribing Environment Ministry to the tune of 7 crore rupees.
Trouble for former Prime Minister Manmohan Singh. Former coal minister supports summons against Singh in a coal scam case. Another former coal minister suggests culpability in the award of coal blocks to the builders.
Larsen & Toubro elevates S.N. Subramanian as Deputy Managing Director and President of the company, could take up the mantle from A.M. Naik when he retires in 2017.
There are more big opportunities for the company today at this moment in time in India than I've seen in a long time.
On his visit to India, General Electric's Jeff Immel says the government is moving in the right direction, calls for market-driven gas and electricity pricing, admits it's tough to be in the power generation business in India.
In a bid to hasten approval, governments plan to realign India's pharma rules with global standards. A new division has been set up to look at drug composition and critical tests. That's an exclusive.
Also on the show tonight, Infosys Foundation expands CSR activities to northeastern Kashmir, ties up with Akshay Patra to bolster the midday meal scheme. An exclusive conversation with Sudha Murthy coming up.
I think it's going to remain a turbulent time globally because, you have the situation of, you obviously have the EM as an asset class is under serious stress at the moment. I think it will now because, India is, and I've written about this, India has a consensus overweight.
But in the short term, how much more pain do you believe we are likely to see for our market?
Well, I wrote an article saying that, at 3,500 saying that I don't think you should panic and sell. I don't think the market has huge downside.
Clearly, India stands out. I mean, if you look at our funds, India is a big overweight for us, and we believe that India is the best equity story.
Our view is that in the near term, yes, the markets have corrected. They have moved up a little bit. There is a consolidation going on. In the near term, we are very, sort of stable as far as markets are concerned.
I think the broad underlying, sentiment is still reasonably positive. In the overall landscape in the globe, India does shine as an oasis right now of relative calm. It does hold promise.
The finance minister has wrapped up his 4-day visit to reassure investors in Singapore and Hong Kong. The big question is, will investments follow? Good evening and thanks for joining us in India Business Hour. I'm Nantara Rai. Surpi Upadhyay joining us from our Mumbai studio. Surpi, the next big step is, of course, Silicon Valley.
Oh, absolutely. It's India all the way, east or west, and this time it will be none other than Prime Minister himself, as he will be gearing up for his 5-day tour of the United States. And to set the stage, top CEOs of both countries have already held a roundtable at Washington today. That and a lot more coming up on the show, but first up, the action on the Lal Street. Now, market staged a solid recovery after a gap down opened and almost flat in trade today, so it wasn't really bad. Sensex continues to trade above the 26,000 mark, losing just around 30 points in trade. The Nifty also lost just around 4 to 5 points to remain within striking distance of the 8,000 level. Mid-caps managed to outperform blue chips, that index gaining over 0.5%. So it was a good show from the bulls, though we didn't see too much of green, but not too bad. A quick check now on Wall Street as well. And we are finally seeing some signs of the market moving ahead beyond that Federal Reserve meeting. Call it disappointment or what you want. But some pretty smart gains now coming in for almost all the major indices, with the Dow and the S&P up nearly 0.8% as the street digests last week's rate action from the Federal Reserve. Very quickly, across the Atlantic, markets in Europe have ended the day with some solid gains, but you can see the CAC running away over 1% higher, the FTSE up, the DAX was deep in red, and that's because of one specific company, Nayantara, that is really dominating global market action, business action rather, today.
That's right. We talk about Volkswagen. The German car maker has admitted to large-scale cheating to falsify emission tests and is now staring at a mammoth $18 billion as penalty. The Environment Protection Agency in the United States has revealed Volkswagen installed illegal devices to cheat emission tests. 5 diesel car models that were supposed to be environment friendly were actually polluting 40 times more than the allowed limit. The stock, like Sylvie was pointing out, gone into a free fall as $13 billion worth of market cap has been wiped out. It's currently down almost 19% in trade. Here's CNBC's Phil Lebeau with the report on the scandal, the implications for the German giant, as well as the apology that is coming from the Volkswagen CEO.
And it's still unfolding in terms of how, A, this is going to be remedied for those people who have these vehicles, and B, just how much of a hit Volkswagen is going to take, both financially as well as potentially in terms of sales. It is under pressure, and a couple of developments happened over the weekend. Yesterday, Volkswagen came out and said, you know what, we're going to stop sales of certain 2015 clean diesel models. That's a huge step in the auto industry anytime an automaker says stop the sale of these vehicles at a dealership. It is starting an external investigation into this entire situation, and fines from the clean air violations, they're unknown. While it could top out at $18 billion, almost everybody that I've talked with has said, look, it's going to be far lower. Could be several billion dollars, but it's not going to be $18 billion. And ultimately, that is determined by the Environmental Protection Agency. Those 2015 clean diesel models that are no longer being sold at dealerships, or at least for now, sale of those vehicles is being suspended. It includes the VW Passat, Jetta, Golf, and Beetle. Basically your cars that are clean diesel cars from Volkswagen, as well as Audi A3 models, those clean diesel models. Yesterday, the CEO of Volkswagen in Germany, Dr. Martin Winterkorn, issued an apology saying, I personally am deeply sorry that we have broken the trust of our customers and the public. Even in the biggest scandals, whether it was Toyota, whether it was General Motors, generally speaking, the public is forgiving and will say, you know what, we know about those recalls, we know about those issues, we're still going to buy the vehicles. You throw a couple $100 on the hood of a new vehicle, they're still going to come in and buy it. In this case, however, many people who were buying those clean diesel models, they bought them because there was a sense of, I am doing well, I am helping the environment here. It is the right thing to do, particularly in California. There are a lot of vitriolic comments coming out of California this morning with people saying, wait a second, you knowingly deceived me into thinking that I was driving a car that was not polluting, when in fact it was polluting. So that's going to be interesting to see what kind of fallout there is for Volkswagen.
A dramatic turn of events there for the German automaker. Sales to the U.S. have stopped. That's diesel cars and that impending $20 billion worth of fine. But now let's move on to the commodity markets. The fall in rig counts in the U.S. is helping a rally of sorts in crude prices in what otherwise is, of course, a bearish market. NYMEX is the contract that's really roaring away because U.S. rig deployment is down for the third straight week, and we're seeing a 3% rally on that contract right now. But moving on, the finance minister has wrapped up his 4-day roadshow to Singapore and Hong Kong, where he was making a pitch to investors to put their money in India. Speaking to CNBC's Jeff Cutmore, Jaitley admitted that resolving legacy tax issues with the likes of Vodafone, Shell and others are his biggest challenge. The finance minister promised speedier resolution, saying it's in India's interest to end these disputes.
Kind of things that we've done and the kind of things which are in the pipeline in India have to be communicated to the investors. And therefore, some impressions which may erroneously go through have to be corrected.
But what was the issue, the one issue that you felt that you were able to ease their concerns?
For instance, a lot of people in the financial sector were very concerned about the goods and services tax. They were extremely concerned about an exit policy and a bankruptcy law. They were concerned about multiplicity of permissions. By and large, they're quite satisfied with the fact that taxation reforms in India are moving in the right direction.
Where often my work touches India and companies is where companies have disputes with the government. And we know the tax dispute has run on for many years involving companies like Shell and Vodafone and Cairn Energy. You have said recently you're very close to a resolution of these disputes.
I'll tell you.
Can you tell us what is going to happen next that ends this?
We now have about 3 issues pending before us. And I'm looking at each of those 3 issues. They are all pending in courts as to the best way to get an expeditious disposal as far as those 3 issues are concerned. And these relate to the companies that you are mentioning. I'm seized of the problem, and we are very eager to have a resolution. The resolution could be by a judicial tribunal. The resolution could be by some discussion within, or similar methods that we've used to settle other disputes.
But they will be resolved.
I'm certain, because it's necessary in the larger interest of our economy to resolve these issues, because tax instability doesn't help the investment environment. And therefore, we want the entire instability over pending taxation issues to be resolved.
The Finance Minister Arun Jaitley talking on the tax legacy issue. Meanwhile, he was in Singapore on Saturday and told CNBC TV 18 Shireen Pan the intention of the National Investment and Infrastructure Fund is to provide funding for all key projects, and while the government would indeed be a part investor in the fund, it's crucial to allow the structure to work independently without any governmental interference.
There are twofold approaches that the funds have. There is one set of funds which are willing to become a part of the infrastructure investment fund, which is
the NIIF.
The NIIF, where the initial contribution comes from the government. So some set of funds have shown great amount of enthusiasm in joining the funds. There are some others who have a policy decision that they don't become a part of another fund, but they are directly willing to fund projects which are being undertaken by these funds or even independent of these funds. And therefore, everybody is willing to look at India. Everybody is willing to put his money into the Indian projects today. But the structure of investment in each case will depend on their own investment policy.
So since you talked about NIIF, and that could be perhaps the next big idea as far as the government is concerned, I understand that it will be operational perhaps by the end of the year. Specific interest as far as pension funds are concerned for the NIIF, and also the NIIF's ability to try and play an instrumental role in repairing private sector balance sheets, because that is what the Minister of State for Finance in a conversation with me said.
Certainly one of the objects of that fund is that you have a lot of stalled projects, and those stalled projects have impacted on private sector balance sheets, and they need infusion of funds. Wherever they are held back because of bankability and non-availability of funds, certainly this can go into them. They can also go into greenfield projects, which you start straight away. And I think those options are available because the investment need of India is very large. We can't sit tight and say we are going to keep our procedures very tightened, therefore money may come or may not come. We need the money, and that's the message we have to send to investors all over the world, including our own domestic investors.
But would it be fair to say that the NIIF, in a sense, would be the enabler, would be the driver to try and start the process of private sector balance sheet repair?
You see, the NIIF, you've used the correct word, is an enabler. The NIIF would have a government contribution. It will have a public sector contribution. Maybe some state can also join if it so wants to. And then funds and other investors globally would become a part of the NIIF, and you can earmark funds for different sectors, so to say. We intend that the NIIF to function completely independent of the government. Eventually, it's the investors who will take over, and the government will be one of the investors in the NIIF.
Sir, in your conversations here with investors, and I know that one issue has cropped up time and again, and that is what you intend doing as far as the state discoms are concerned, because that in fact will impact not just the banking sector but the economy in general. You said that this is a matter that has been dealt with at the Prime Minister's level, and it is a matter that is being taken up on a priority basis. What should we understand that to mean? Is the current financial restructuring package going to be extended, or are we going to see something else in this place?
I'll be more specific than that. You see, we've first of all taken it up with the defaulting discoms and the state governments which own the defaulting discoms. It can only give a transient pleasure to a state government or an optical pleasure to say that my state fiscal deficit is completely independent of the state discoms. Factually, it's a part of the same corpus. It is for political reasons that some of the states are not charging adequately for the power, and therefore the discoms are in a loss. Now, there is no free lunch. Somebody has to pay for that power. Either the state budget pays for it, and if the state budget doesn't pay for it, who else is going to pay for it? The consumers pay for it. Now, the deficit can't be indefinitely financed by the public sector banks, because that deficit is now impacting on the balance sheets of the banks also. And therefore, the state discoms in some cases have become absolutely villainous as far as the Indian economy is concerned. This whole concept of not charging for power, making the discom go sick and expecting the public sector banks to fund the state discoms can't be a sustainable approach at all. And therefore, we've tried various methods. We've tried to speak to those state governments. The power minister has himself spoken to each of the state governments. As I mentioned, there are 4 states, I don't want to name them, where the discoms are highly defaulting, and there are 4 others where they are partly defaulting. And therefore, these 8 states have been put to notice by the Reserve Bank of India already, that this can't go on indefinitely, the banks can't go on funding them. After the power minister's discussions with them, he's presented a report, and it's been taken up at the level of the Prime Minister.
And those assurances that came, that exclusive that you saw, had a clear impact on PSU bank stocks in particular. The hope that some of these power issues will be resolved, and therefore some of these banks will get some of the bad loans off their balance sheet. So massive rally in PSU banking stocks in particular. Now, the finance minister also promised more autonomy to IDBI Bank. Jaitley said that the government will maintain an arm's length distance, just like Axis Bank, to infuse more professionalism and freedom in decision making. The IDBI stock shot up in trade almost 17% higher towards the close because of those comments.
Banks which are not under the Banking Companies Regulation Act, for which no amendment is required, which are only registered with the Companies Act. The Axis Bank, for instance, and that's the model.
Finance Minister talking very highly about the chances of IDBI Bank getting a kind of a makeover. If IDBI Bank can be recast on the lines of Axis Bank, we have something great coming.
IDBI Bank is the big mover in the broader market. The news that the government may allow IDBI Bank to follow an Axis Bank-like structure, and you are seeing a big up move in that stock, 13.5%. This is the CNBC TV18 impact that you're seeing on the stock. So big moves coming in on IDBI Bank.
Hong Kong and Singapore covered by the finance minister. Next step, Silicon Valley. The Prime Minister all getting set to fly off to the US later this week, but some of the big wigs of India Inc. are already there. So be the Tata Group Chairman Cyrus Mistry or the top boss at Bharti Enterprises, Sunil Mittal, they're all there at the Carnegie Endowment in discussion on the Indo-US economic ties at Washington, D.C. And there's clearly no difference of opinion over the scope of growth and economic ties within the 2 largest democracies of this world. Each of them did point out some of the key hurdles yet remain in the system. So while the CEO of Honeywell lamented over the bureaucratic hurdles, Cyrus Mistry spoke about the need to walk the talk. That's, of course, as far as reforms go. Sunil Mittal did make a case for easier US visa norms for the Indian companies.
Immigration is becoming a very touchy point across the globe, but the fact is between 20 to 25 million jobs will be short in the Western world, and they will come from somewhere in the world. And I personally believe there are only 3 places they can come from: Africa, Saudi Arabia, or India. I mean, they are the young populations which can migrate easily. Africa doesn't have enough skill sets to manage their own affairs, so they don't have enough talent in the pipe. I personally believe the Western world, including the US, needs to be a little more pragmatic in opening up the visas for the right skills that the country would need.
The worst thing that can actually happen for India is this pro-development movement, and the level of communication around it doesn't fructify in reality, because that would be a totally retrograde step for India in totality. And I think, therefore, there has to be some time limits where we show some positive moves on the ground, or else we have a risk of moving back one step.
It was like India took British bureaucracy, doubled it, and added 10 times the people. And it just makes getting anything done almost impossible. And that bureaucracy needs to speed up, needs to become a lot more focused on helping business, helping the people do better, and become more decision-focused. And I see a lot of the effort of the Indian government focused on trying to make that happen, which is a wonderful thing. It seems to me that from a U.S. business perspective, we can help with that. And we can be talking about, here are some of the issues that we're seeing. Here's what needs to happen if you really want to increase the prosperity for your people.
All right, so collaboration, talk, strategy, it's already begun before Prime Minister Modi's U.S. visit. But moving on, the CBI has told the Supreme Court that there is a prima facie case to probe allegations of bribery against aluminum giant Hindalco. A PIL alleges that kickbacks worth 7 crore rupees flowed from the company to the Environment Ministry. Ashmit Kumar has been tracking that case at the Apex Court. Ashmit, this is a pretty big statement coming in from the CBI saying there is a need to probe Hindalco.
Indeed, not just a big statement, but also a departure from its earlier stance, which it had expressed before the Apex Court. Now, just to summarize the day's developments, the CBI has stated before the Apex Court that it does find merit at a prima facie level in terms of this case being fit for investigations in terms of kickbacks flowing from Hindalco to the Environment Ministry. That, of course, is the allegation. And here's how the story unfolded. The CBI, as a part of its coal scam investigations, had raided the Delhi office premises of Hindalco, recovered 25 crores in unaccounted cash, and importantly, also a diary which allegedly details a flow of kickbacks from Hindalco to the Environment Ministry. Subsequently, we'd seen a PI in the Apex Court again raising similar arguments, raising similar allegations, and also seeking a CBI inquiry. At that stage, the CBI had clearly held that it sees no linkage of these funds, of this diary with the coal scam, and as a result had stayed silent on that, had stayed mute on that. But however, Supreme Court had reprimanded the CBI, had sought for more clarity on that, and now we find that the CBI, after its initial inquiry, has held prima facie that this is a case fit for investigation, for inquiry. It will go ahead and probe the aspect of kickbacks. So that's the stance coming in. It has also submitted a report of these initial investigations in a sealed envelope to the Supreme Court. We'll, of course, see more action in the next date of hearing, which is later this month. Back to you.
Okay, Ashwin, let's talk about the other coal scam cases then. Former Prime Minister Manmohan Singh under fire from not just one but 2 of his own party men, previous colleagues in the cabinet. You know, what's happening? We've been hearing about how the special court, Madhu Koda saying Manmohan Singh should be summoned, etc. What's the update?
Well, indeed, it appears that former colleagues of the former Prime Minister Manmohan Singh are taking aim at him in order to defend their positions as they face trial. Of course, we've heard Madhu Koda seeking summoning of the former Prime Minister Manmohan Singh, but the latest, of course, has been the former MOS Coal Bagrodia, while seeking, importantly, a stay as far as the ongoing coal scam trial is concerned, while seeking a stay on that with respect to his involvement, with respect to him being summoned as an accused. Bagrodia lashed out at the former Prime Minister, arguing that there is a much stronger case that the CBI has against Manmohan Singh, that there is evidence to suggest that K.M. Birla had extensive meetings with the former Prime Minister. He had also gone on to argue that the Prime Minister had sought to intervene at the time of the allocation stage, that there were directions that were emanating from the PMO to the Ministry to fast-track the allocation to the specific companies. So clearly strong allegations being made. The sum and substance essentially of Bagrodia's arguments was that if Manmohan Singh, mind you, Supreme Court has granted relief in terms of a stay on that coal scam trial. So that was essentially the argument, that if a stay can be extended to Manmohan Singh, why not in this case of Bagrodia as well? That, of course, is the argument. The CBI, importantly, is yet to respond to those allegations, to those comments. We'll, of course, see more action on September 29th. Back to you.
All right, Ashmit, thanks so much. Well, matters definitely heating up in both of those cases. But for now, let's move to some corporate action. Engineering major Larsen & Toubro has appointed S.N. Subramanian as the Deputy Managing Director and President of the company. The appointment comes close on the heels of the chairman, that's Mr. A.M. Naik's recent comments suggesting there could be a structural rejig at the top of one of the country's biggest conglomerates. Archana is here with all the details. Archana, how does this kind of fit in with the broader scheme at L&T in terms of their succession planning?
Well, this becomes one of the most important pieces in the succession planning at engineering giant. Now that S.N. Subramaniam has been elevated to the post of Deputy Managing Director and President of the company, because that makes him one of the lead candidates for the top job at L&T. Subramaniam has been in L&T for over 30 years. He's an old hag. He's led many of the infrastructure and construction projects both in India and overseas for L&T, and has held the entire infrastructure division for the company. He was elevated and inducted on the board of L&T in 2011. So has been at the top, somewhat at the top helm at L&T, leading the company's infrastructure division. His appointment becomes more relevant considering the fact that the current MD and CEO, K. Venkatramanan, is retiring end of this month. And there is a possibility that post his retirement, the post of CEO will be dissolved, which in a sense means that Subramaniam, as Deputy Managing Director, will become the most important person running the day-to-day operations of the company at this point in time. Also related to Mr. A.M. Nayak stepping down from Executive Chairman's position in 2017 when his term ends, and that is when the entire succession plan would come and culminate with a possibility of Mr. Subramaniam being elevated to the position of MD and possibly and maybe chairman. However, the fact that he's not been named the managing director yet and only a deputy managing director leaves a window of speculation and some gap in succession planning open, saying that possibly others could be in the race for the top job, but certainly at this point in time, he's the most important person and the lead candidate for the top job at L&T. Back to you.
Okay, Archana, thank you so much for getting us those very interesting details. And sticking with news from L&T, Bain Capital will be acquiring more than 10% stake in L&T Finance. The deal, which was valued at around 1,000 crore rupees, will see the promoter L&T offloading some of its stake to the private equity giant. Bain will be issued fresh equity worth 1.75% of the total shareholding, and an additional 3.51% of the stake would be issued via fresh warrants, which will have the option of being converted within 18 months of issuance. L&T Finance has sold an additional 9.5 crore shares in the open market today, which was picked up by Citigroup, likely on behalf of the American private equity giant.
Okay, that's all the news we've got for you from the house of L&T. Moving on, GE's top boss, Jeff Immelt, today said the American giants decided to focus more on manufacturing or make in India. Immelt said this after meeting with the Prime Minister Narendra Modi and told the press thereafter GE is particularly enthused by rail modernization as well as commercial and military aviation, renewable energy, healthcare. For oil and gas, Jeff Immelt did make a case for prices needing to be more market-aligned. Now, refraining from quantifying new investments discussed with Narendra Modi, GE's global chairman and CEO did say there would be no problem in investing the $500 million that was announced last year, and that new targets would be set once he returns to the U.S. Immelt, however, made it clear GE is going to stay away from civil nuclear energy unless there is a common language on the laws pertaining to liabilities. And despite all the slowdown worries over China, Immelt is not bearish at all when it comes to the world's second largest economy.
India is going to be a place where there's new opportunities in the oil and gas sector. So we see, as both gas is found, but also as prices are allowed to become, I would say less subsidized and more market-based pricing over time is going to allow for more investment and more development as time goes on. There are more big opportunities for the company today at this moment in time in India than I've seen in a long time. Now, again, when I look at big projects, there's more big projects or big project capability today in India than I've seen in quite a long time.
Well, that's GE's top boss, Jeff Immelt, sounding gung-ho on India, but making it quite clear the business house is going to stay away from civil nuclear energy. With that, we have to wrap up this edition of India Business Hour. Thanks for watching.